Hello guys and welcome to a new video. In today's video I'm going to give you a trade recap on a trade that I took on the 21st of June 2024. It is a short on EURUSD utilizing different kinds of ICT concepts. But before I'm going on with the video, make sure to smash the like button and subscribe on the channel. So for now, let's hop right into the video.
Before I'm even considering getting into a position, I always take a look at the economic calendar during my prep to see where the opportunities are during that specific trading week. For this trade recap, we are looking at EURUSD, so we are mainly looking for those high volatility injections related to the dollar and the euro itself. And when we see how our roadmap is looking like, we can see that we had a high impact news on the Monday and on Tuesday as well. However, often the bulk of the weekly expansion is taking place on the Wednesday. However, we can see that we had a bank holiday on Wednesday. So this means that it was highly likely that the dollar was going to be in a tight range and not really seeing that weekly expansion. This means that my main focus points for the week were going into the later half of the week itself, where we had high impact news events around the dollar and around the euro itself. So this was most likely where the bulk of the weekly expansion was going to take place. So when you take a look at this calendar, you should already know that the main focus points of getting yourself into the correct position should be on Thursday and on Friday itself. So we know when we should anticipate the correct price. However, we are trading EURUSD, so we should also know and create a bias on the DXY itself. We are now looking at the DXY daily chart, and before I am going to annotate it myself, I would like to give you the opportunity to do so yourself to see if you are on the right path and if you are seeing the same things as me. Okay, let's establish a long-term view on DXY. You should notice the following. This is the NFP candle, and this is the candle that has been established at the beginning of the month of June. NFP often creates the low of the month, and we have taken out sell stops right over here. Now we can see where we can find counterparty liquidity for DXY to draw into. We see that at the top over here that we have relative equal highs in the form of buy stops. So now that we were trading from these sell stops that have been taken, we can anticipate price to go towards these buy stops right over here. After we broke structure, we dipped back into this bullish fair value gap, and we can see that bullish PD arrays are now getting respected to push price higher. So overall, our long-term view for DXY is going to be bullish, and we are looking for price to trade towards these equal highs. Now that we've taken a look at our long-term view and have established a bias on DXY for in the long term, we can zoom in on the current daily time frame and see how the structure is looking like. This is how Monday's candle has been formed. This is Tuesday, where we are creating a low. This is Wednesday, and this was the bank holiday. And see how noticeable it is that with the bank holiday, we have a lack of liquidity in the marketplace, and we can see that this is that tight candle. This is that what we were anticipating, that we are not going to see that real move on the Wednesday occur. Following it up, Thursday, we were anticipating to see a big range, and we can notice that we had a large expansion towards the upside. For now, we can see that we have a classic expansion week, where the Tuesday is the low of the week that has been created. Now on your screen, you can see a schematic of how a classic buy week is looking like. On the Monday, we can anticipate it being an accumulation range, or you want to see a Judas swing move lower going into Tuesday. On Tuesday, we are hitting a high time frame PD array and creating the low of the week. On Wednesday and Thursday, we are going to see the bulk of that weekly expansion, and you want to see that the Thursday is meeting that weekly draw on liquidity. Friday is then going to happen that we are going to see price trade back into the range. Now, in our scenario, we had a bank holiday on Wednesday where we did not have that real expansion on that specific day. The real expansion happened on the Thursday. However, and that's what I'm going to show you on the next slide, we did not meet our weekly draw on liquidity. And that is why I was anticipating Friday to trade higher at first before we are going to trade back into the range. And this is how it translates towards the chart. This specific candle is last week's Friday's candle. This was the Monday, and on Tuesday we are taking out sell stops into a daily order block in combination with a volume imbalance. On Wednesday we have that tight range and we see a large expansion going into Thursday. We have taken out those sell stops on Tuesday going into a high time frame PD array, and with taking out those sell stops we want to go into counterparty liquidity, and we can find counterparty liquidity at the top of the range, and we can find those buy stops right over here. So the weekly objective for us was going to trade into those buy stops after taking out sell stops. With the large expansion on Thursday, we can see that we are not meeting that expectation as of yet. So I was anticipating price going higher on the Friday, and this means that I could go into sells for euro later on. Now that we've established a bias on the daily time frame, let's zoom into the 1 hour time frame and see how price is developing overall. And here you can see that clear range that has been established on the daily and how that translates over to the 1 hour time frame. We are taking out sell stops right over here, and after we broke structure we are trading higher towards that counterparty liquidity in the form of the buy stops. But how did price develop in that buy side of the curve right over here? Now with the annotations on your screen it should become a lot more clear. So after the weekly open has been established, we are trading downwards on Monday, and going into Tuesday we are taking out those sell stops and creating that low of the week. Going into the Wednesday we are having that tight trading range due to the fact that we have that bank holiday. However, we are creating an SMT divergence with GBP USD. A SMT is key for going into a reversal. After that the SMT has been formed, we can see that we are trading higher and closing above this downwards closing candle and are utilizing it as support. Now that we have that change in state of delivery and utilizing this order block as support, we have our low risk buy going into the buy side of the curve. From the low risk buy we can see that we have an expansion and a retracement going into this 1 hour fair value gap, and we are accumulating overall. After the first accumulation we have another push higher with price trading above that weekly opening price, and we are trading back into a bullish PD array in the form of this 1 hour order block. Now at this second stage of accumulation we are anticipating that silver bullet to be formed, so I am anticipating a higher value in dollar going into the Friday towards this buy side liquidity. So for me personally I was biased long on dollar, so I was looking to short Euro USD on the Friday itself. Now that we've established a bias on dollar, we need to take a look at the Euro USD chart and see if our bias aligns with the DXY chart. So let's start off with creating a long-term view on euro dollar. And this is how I look at euro dollar for the long run. Something that's noticeable is that we are on the buy side of the curve right over here, and after a period of accumulation, we are taking out buy stops. After we have taken out these buy stops, we can see that we had hefty displacement downwards and that we broke structure overall. Now price is likely willing to seek counterparty liquidity after taking out these buy stops and breaking structure. After we broke structure, we went into sell side of the curve, and now bearish PD arrays are getting respected and they are pushing prices lower. So overall, I am looking for EURUSD to trade lower towards these sell stops right over here in the long run. Now that we've established our long-term view on dollar, we need to take a look at how the current price action is looking. And when we take a look at these candles, we can see that the Monday candle traded up higher. We created a high on Tuesday. Wednesday, during the bank holiday, we had a tight consolidation range. And on Thursday, we saw the first big expansion of the week. But how does it look like with annotations on the chart? And now with these annotations on the screen, you should see that we have a lot of similarities to the DXY, only it is a inverse scenario. This is the Friday's candle of the previous week. Monday, we are not able to take out either sell stops or buy stops. And on Tuesday, we are taking out Friday's buy stops, trading into a bearish PD array. Afterwards, we had the tight consolidation range on Wednesday and a large expansion move on Thursday. With the high of the week being created on Tuesday with taking out buy stops, price is likely going to see counterparty liquidity. And where can we find counterparty liquidity? We can find that right over here at the sell stops, where we can find sell side liquidity. On the Thursday, we had the expansion move lower, but the draw on liquidity for the week has not been met. So for me personally, and which was in line with dollar, I was looking for lower prices towards sell side liquidity on the Friday for EURUSD. Now that we've established the bias on the daily time frame for EURUSD, we are zooming in on the 1 hour time frame. And on this time frame, you can clearly see the range that we have been established on the daily time frame. Right over here, we are taking out buy stops, and after we took out buy stops, we are trading lower. We are now anticipating lower prices in the sell side of the curve. But how did price develop overall in the sell side of the curve, and how could we get into sells personally? And now with the annotations on the chart, it should become a lot more clear. After the weekly open has been established, we are trading higher and we are making that high of the week on Tuesday, taking out those buy stops. After we are creating that high of the week, we have a SMT divergence with GBP USD. And again, creating that SMT divergence is a key for getting into a reversal. After the tight range on Wednesday, we are trading lower and we are changing the state of delivery by utilizing this order block to support lower prices. After that, the order block has been used, we can see that price went into accumulation, being that as the first distribution. After the first distribution, we had another displacement lower, getting into the second stage of distribution. And this is also known as the ICT silver bullet. And this is also where I got into sells towards sell side liquidity. To make it a little bit more clear, this is where I entered into sells on EURUSD, and this is where I took profit. I entered right after the rejection of this 1 hour order block, anticipating a low resistance liquidity run towards that sell side liquidity. And in the end, I was able to make this monetary value of $2,000 on this specific trade. After I took the position, we had a little retracement higher, taking out this short-term high, and we had an SMT divergence being created at the second stage of distribution. Seeing this is absolutely key, and that is a sign that we are going to see that low resistance liquidity run lower towards that sell side liquidity level. And as you can see, eventually we got that huge drop lower towards sell side liquidity, and that was after the red folder news volatility injection on the Friday morning. But as you can see, I took full take profit at the low. However, we did not have that run on sell side liquidity. Why did I take profit early? Well, that was because DXY was at the same time hitting that weekly objective at the high, whilst euro-dollar was failing to take out the low, creating an SMT divergence at the low. And I personally did not want to take risk for price trading higher, hence why I decided to take full profit, because weekly objectives are met and then we can anticipate Friday to trade back into the range. Hence why I took full profit on my position. And that brings us to the end of the video. If you like the video, I would highly appreciate it if you smash that like button, and if you want to see more videos in the future, make sure to subscribe. But for now, I want to really thank you for watching the video, and I will see you next time. Bye bye.